Good morning, everybody. Thank you for joining me for this morning's edition of the Real Estate Walk and Talk, coming to you straight from my garage because it's raining and lightning and thundering outside here in Jacksonville this morning, but that's not going to stop us. So the question of the day that I get asked often is, how do you choose the right market to invest in rental properties? So I'm going to give you 3 steps to follow so that you have the ability to do the research yourself, to make the best decision for yourself, and to have confidence into why you're investing in that market for rental properties. And before I do that, though, we do have a new episode of the Not Your Average Investor Show, which is coming to you live tomorrow at 12:30 Eastern. The topic is what you need to know about rent collection right now. The most important topic on the minds of rental property investors is, how do I collect rent? How do I do it with compassion? And that's what we're going to be discussing tomorrow at 12:30. The link is in the description, and I hope to see you all there. And thank you all for joining me this morning on the Real Estate Walk and Talk. So today we are talking about how to choose the right market for rental property investing. I appreciate you guys jumping on this morning. I hope you're having a wonderful morning here. So we're going to go over 3 steps that you can follow to choose the right market. How do you know where you're putting your money as far as rental properties is the best market for you? So step number 1 is to find a market with low home prices, right? The first and most important thing that you need to focus on is finding positive cash flow, meaning more rent coming in than expenses going out. So the first thing you're going to look for, step number 1, is find a market with low home prices. What you want to measure against is the U.S. median home price, and your market should have lower home prices than the U.S. median home price. Where do you go to find that information? Well, you can go to a few different sources. You can go to your local MLS, multiple listing service. If you're not a real estate agent, you can find a real estate agent friend, and you can find out what your market's median home sales price is. And then you can look at Zillow.com. You can also look at another site called AttomData.com, AttomData.com. So find low home prices. That's the number 1 step. Number 2, once you found that short list of properties that have lower home median sales prices than the U.S., then you're going to make it a little bit harder. Number 2 is find, of those properties, which ones have higher gross rents than the U.S. median gross rent. Where do you go to find that information? The U.S. Census. It's available for you. Go and check that out. So you now, number 1 is lower home prices than the U.S. median. Number 2, you've shortened the list to only markets that have higher gross rents than the U.S. median. That's where most people stop. The 3rd step is the most important step if you want to build long-term wealth. The 3rd step is then to look of those short list of markets and find which markets have the highest long-term average home price appreciation. Your list of markets right now is probably maybe 5, maybe 10 markets. And of those lists, put in the research, find out what their long-term average home price appreciation rate is. Go all the way back, go 20 plus years, right? Because what you're looking for now is, as a buy and hold investor, how much should I expect my homes will appreciate given the assumption that I hold on for a market cycle? And this is the absolute biggest contributor to your long-term return on investment, more than positive cash flow, right? And I think positive cash flow is the first and most important thing to look for because it has to be paying for itself. But when you look back after holding on to your rental property portfolio for 10 or 20 years, you're going to find that the biggest contributor to your wealth is actually home price appreciation. So how does Jacksonville stack up? You all know that I invest here in Jacksonville and help other clients do the same. How does Jacksonville stand up? Well, 9% lower home prices than the U.S. median, 1% higher rents than the U.S. gross median rent, and 34% more appreciation than comparable cash flow markets across the country. Do the research for yourself. Oh, I forgot to tell you where to go to find the home price appreciation research. Go to the Federal Housing Finance Agency website, which is FHFA.gov. There's a housing price index calculator there, and you can do the research there. So I encourage you to do the research, find out where your market stacks up, and if you don't like what you see, change your market. And I hope to see you all tomorrow at 12:30, the Not Your Average Investor Show. Again, you can join the link. You can click the link to get the details tomorrow at 12:30. It's going to be a great show, and I'll see you then. Have a great day.